We're live. Hi, Pablo. Welcome to Venture with Grace.
Hey Grace, thank you for having me.
Okay, so to start the show, I would love for the audience to learn more about you and 161 Ventures. And I feel like one of the things, like, since like we met at the Seattle, the IA40 summit, I feel like it was really interesting for me to like see other like amazing founders in like other cities to like creating events as well as like other media content in other areas of the US. Like, why don't we start with like how 161 got started, and then like, what were you like working on like on the event side that kind of like allow like a fund to exist out of the hustle.
Yeah, absolutely. Thank you again for having
Oh,
me. So
hi, Yusuf. So sorry, wanted to say hi to the audience, but
that's
anyway.
okay. Yeah, so I was a student at University of Florida, and back in 2016, I was starting my first company, and I met my now co-founder Justice through the Entrepreneurship Club. And at the time, we realized, there's so much talent here, over 60,000 students, over 13,000 engineering students, and nobody was teaching people how to build startups or how to raise money. And so our smartest friends kept graduating and moving to the Valley, moving to New York. And so selfishly, we wanted to keep more of our friends in Gainesville and keep more talent here because we figured it'd be better for the ecosystem and better for the economy. So we began hosting these meetups. In the beginning, it was these backyard bonfires, and we would sit around and talk about ideas and bring in mentors and investors, and those quickly grew and turned into executive roundtables and workshops. Next thing you know, we're hosting the largest events in North Central Florida for startup founders. But then the pandemic happened. And all of a sudden, we were forced to cancel all of our events. So we kind of pivoted and we ended up launching this accelerator program over Zoom, just modeling a lot of what Y Combinator did. We read all the program essays, watched all the YC videos. Like, cool, we're just going to copy all this. And in 2 years, we ended up helping 40 companies raise over $13 million. And one of them got acquired. They generated over 15 million in revenue. And at that point, we said, hey, this has been fun. It's been a lot of work. And there's been 13 million transacted, and we haven't gotten a dime here or any equity in these companies. So how do we start getting a piece of the pie? And the first thing that we did was we asked all the VC firms that were investing into our accelerator companies if we could get a finder's fee or a scout fee. And they actually all told us no. So at that point, we're like, all right, well, then we have the deal flow. We're the ones doing all the work here. Let's just raise our own fund. We were both 26 years old at the time, not knowing what we were getting ourselves into, never having worked at a venture fund, never having managed money. And so we were just naive, and we said, hey, what's going to stop us? When, we just went after it. So that summer we pitched over 50 investors, got like one yes. We tried to pitch the managing director of University of Florida Ventures. He said, you guys should go build a company first. He's like, you're not going to raise a fund. You need to build a company, sell that, and then you can raise a fund. And by the end of the year, we were able to raise about $500,000. And we said, well, let's start building a track record. So we ended up doing our first close early 2022. And 18 months later, that same managing director from UF Ventures ended up investing into the fund. And now today we're managing over $3 million. We've made 15 investments. But going back to our roots of how we started, we're now hosting bigger and better events than ever before. So we're doing sold out tech summits from Miami to Gainesville to Cleveland to Seattle. And this has become our core superpower as a fund. It's how we source deals. It's how we get in touch with technical leaders who can help us diligence companies and advise the portfolio. And most importantly, it serves as a platform for our portfolio companies to present on to help them close more deals and help them raise more capital. So that's the 161 story.
Love that. What does 161 stand for?
So we named the firm after the Fibonacci sequence, and it's also known as the golden ratio, and it's
Mhm.
1.61 and several other numbers, but naturalists say it's the most efficient ratio for growth to occur. And Leonardo da Vinci used to use it in all his paintings. It's naturally occurring, animals, plants, the way they grow. And we want to create a community for startups to grow as efficiently as possible. And that's why we named it 161 Ventures.
Wow, that's deep. Uh, I have a question on this. I have so many questions here. First of all, like what I thought like like you guys just had really good vibes, and obviously we're gonna collab on our first dinner soon. So I want to chat about like when you're thinking about like building up the track record, like what were you doing? You mentioned about like you created like a like mini YC in University of Florida. What was it like to like, like getting the first speakers? Like which speaker are you like picking? And then like how do you kind of like get the first amount of founders to join the accelerator?
Yeah, it's a great question. It's kind of like the chicken and the egg problem.
Mhm,
Thankfully, there aren't a lot of successful startups that are still
mhm,
based here in Gainesville. There's only a handful. And so reaching out to those individuals, a lot of them were just willing to support because they wanted to help the ecosystem. So there's a company called Feather, which is now, I think they're doing maybe around 15 million or maybe more than that a year in revenue. There's another company called Fracture that's scaled to over 30 million a year in revenue.
mhm.
And these were both started by University of Florida alumni slash dropouts, and they were still based here locally. So those were some of the people that we would bring in, but there's a couple of others as well. As far as the students, there are so many students that had growing up had seen movies and heard stories, and not being from the West Coast, we don't have the startup culture ingrained in our DNA. So really, we don't even know the first step of like how do you start a company, and we don't even know the difference between like a startup and a small business because there's just no education about these things. So it was like it wasn't hard to get the people to come out because they were all curious and they wanted to learn, but they were obviously very early on compared to like if you were to do something similar at Stanford, you're going to have a whole different level of startup founders showing up. So
For sure. I like so I wonder, so when you guys first started like on the event series, like who was the first speaker? And you talked about like, how you were like raising funding from the, University of Florida fund manager or like so like who was the first investor and like how do you kind of like land that? Like you mentioned like you talked to 50 people and then one person landed. That's I think pretty good. But like how do you like how were you talking about it? Were you be like, hey, here's our track record, like this is what we have done, like you should invest, or like how like what was the conversation like, because a lot of people are saying like if you want to ask for money you have to ask for advice, so like everybody's asking advice from everyone. How do you kind of like turn that into like a check, because I think it's really impressive to close any check at all, from with like someone with like maybe not like a past like experience in working venture for like 5 years or something.
yeah, it's a great question. And you're so right. Like in the early days, we didn't know how to pitch. Our pitch was horrible. We didn't know if we should ask for advice or for money. And in both cases, we would almost always hear no. So it was really just like what really helped us is that we had been doing programming and events and things in the startup ecosystem here for a long time. So a lot of the yeses that we got in the early days were people that were like mentors of ours, founders of notable companies in town that had exits, and they had seen our growth and they had seen what we'd been doing. It wasn't just like we woke up one day and we're like, hey, let's build a fund. We had been hosting events since 2017. It was now 2021. So four and a half years later, now we're talking about raising a fund to continue building the ecosystem. And by the way, we're going to keep doing some of the programming that we've been doing for 4.5 years. And that's gotten so much better. So that's what really allowed us to get those first couple of investors. The Gatorade family was one of our first yeses. The daughter of the inventor of Gatorade, she's still very involved here in the community and supports the ecosystem. And then several other notable founders that again they just saw us and they were like, we see potential here because these people also. Two of our early investors, they built a company called Infinite Energy here in Gainesville, started in 1994, scaled it to $1 million in revenue just in the first year, and they ended up scaling it up to over 600 million a year in revenue, and sold it to Gas South. And so when they started, they were both in their 20s, and so they saw themselves in us in a way. They're like, yeah, these are the next guys who are trying to build the next big thing here in Gainesville, and so they immediately said yes. It was like one meeting and they were in. But a lot of people, it was not like that. So, yeah.
I feel you. I wonder, so like basically, you guys started doing a lot of events, and then I feel like, there's a lot of people doing events, but I feel like not many people actually successfully turn into a fund. You mentioned about like a accelerator. I guess like how was the first programming started? And then like how do you help the like large amount of companies that you have like involved with like to raise money? Like what were the kind of like programming there? Is it like just like getting a past founder or investor into the program to speak and then like the students pitch to them, or like what's the vibe there?
Yeah, so in the physical programming, it was, just a local CEO or CMO or whatever. But then when we had the transition during the pandemic, it was all over Zoom, which had
Right.
some advantages to it because now we could pull in people from anywhere. So
Mhm.
we ended up having somebody like Rob Chestnut, who's become a great
Oh
friend.
yeah, past guests on our show too.
Yeah, exactly. The former chief ethics officer of Airbnb. We had the former VP of growth at Spotify. We had
Mhm.
the former CEO of Priceline, and a lot of these speakers we got them just through cold email, cold outreach, or through meeting them at another event and asking them to speak. As far as picking companies, we had no idea what we were doing, but the best thing we did was just go after it because we were getting those reps in. We were getting the experience of picking companies, understanding what we did, what was wrong about that company, or maybe like it didn't go as planned. Why didn't it go as planned? And we could learn from that experience. But we were doing 2 cohorts a year, and we did it over a 2.5 year period, and so it allowed us to see a large set of companies relatively, and really get to learn from all of these.
I think one of the unique advantage of like being outside of Silicon Valley is like, you can be that like core person in your local community. But I feel like living in Silicon Valley, or like maybe I know that you guys have a lot of experience in Seattle as well. How do you kind of like replicate that in like a tech hub? So like I feel like in Silicon Valley, there's like so much things going on. Every day it's a tech week vibe. So how would you kind of like expand to like a region that's like more tech saturated?
That's a great question, and that's something that we've actually discussed quite a bit. And there's a reason that we haven't tried to really do too much over there, because why would we go to the place where there's the most amount of capital, the most well-known investors who have deep roots, by the way, and like the top founders, they just have to make a phone call. They don't need to go cold pitch anybody or reach out to any investors. So, Seattle for us was a very attractive market because it is number two for engineering talent in the country. It's the cloud capital of the world, and yet it's not even top five from a venture funding standpoint. So
Why
we're
is that? I was like actually surprised too, like just because I feel like living in Silicon Valley, like of course, whenever but like when I go to Seattle, I'm pretty impressed by like the towns there, or like the company, there's like Microsoft, there is like, the Costco, the Starbucks, and a bunch of other companies, right? Like, so why is it like not as robust as like Silicon Valley?
I think there's something in the culture, like Silicon Valley has this culture of experimentation and taking risks and starting something new. Whereas I think Seattle has this culture of like, there's all these large tech companies. So people kind of grew up in this tech world, but a lot of the family that they had and friends had these stable jobs that, they were able to make good money over a long period of time by, continuing to work at these large companies and having their stocks vest. And so I think it's a different culture over there. There's a little bit less of that. Like, I want to take a risk. I want to go out and try something new. And also, I think part of it is having those golden handcuffs. It's like, you've worked so hard to earn this salary and this stock. And do you really want to jump out and quit and start a startup where you don't know if you're going to be able to have a salary, you don't know how you're going to pay the bills and all these things. And I think we see that both on the founder side and the investor side. I think a lot of the angel investors in Seattle are a lot more reluctant. They don't make it. They're not as active investing into the tech startups as you see in the Valley. And I think it's just the cultural difference.
I wonder, so like when you like, let's talk about the event side of things, right? Like, so I know that like, obviously right now it serves the purpose of like generating better deal flow, or like getting other LPs in, or like whatever, what like just like the fund building side, whatnot. How do you think about like the event programming, and that I know that you guys done like so many events, and like, oh thank you. So like so many, you guys have done so many events, and like in like I believe 500 events or something, Christopher was, like, telling me. I was like, "Wow, that's crazy." So, how do you, like, do that many events in, like, that kind of, like, high frequency, and then controlling the quality as well? Do you record everything? Is that, like, oh, like, private dinners? Like, or what's, like, the mix of things?
Yeah, it's a great question. So we've done over 100 events, and that's since 2017. So when you think about it, that's over a 7.5 year period.
Mhm.
Um, and so really it started off as like a passion project, and we would do one event per month. Then it started to ramp up. The pandemic forced us, it was about 18 months without doing any events. But then, actually it came out of necessity. So after we had our first close, we began making investments. The market was here when we started to fundraise. By the
Mhm.
time we started to deploy capital, the market was here. And so when we
Isn't that a good thing for you?
it's a great thing for in terms of valuations, in terms of finding founders that are really building for the long term and are being capital efficient. But it's also a tough thing because just as hard as it is for founders to raise, it became just as hard or harder for VCs to raise for their funds. And so when we go back to continue raising our fund after those first few months where we started deploying and running the last cohort of our accelerator, we realized like, oh, it's a different market. Oh, we're not. I
Mhm.
mean, we were struggling to raise, and so we kind of. I think when your back's against the wall is when you think the clearest. And we had gone through several months of not being able to raise any more money, of rejection after rejection, and we had this insight. What if instead of telling people what we're going to do, why don't we show them? And that is what led us to bring back the events. And so in a 5 week period, we planned the first ever Gainesville Tech Week. We had never raised any sponsorship funds for any events that we had done previously. For this event, we managed to raise over $12,000 in sponsorships. We sold over $2,000 worth of tickets, and we had over 600 people register. And all of a sudden, it was a game changer. It worked exactly as we had expected and planned.
Mhm.
We were getting new LPs, we were getting new advisors, we were supporting the ecosystem, we were helping founders get connected. And all of a sudden, it was like, boom, like we figured out what is going to be our core differentiator. And now we just got to ramp it up. And so since then, we've done probably over 30 events, generated over $300,000 from these events. But we don't do it for the revenue. It's really to support the ecosystem and to help these founders and bring in that deal flow and the LPs as well. So it's been a game changer for us.
So to create a successful event, how do you figure out like who should be speaking, who should be paying? Like, what's a psychologic of like people showing up? Because I feel like right now, like maybe I don't know about like Florida or like anywhere else, but like living in Silicon Valley, every day there's like 5,000 events and then there's like free events like at the biggest VC firms. How do you kind of like just like having a differentiator from the event angle and what's a vibe of like people like paying to attend just because I feel like it's super hard to get people to pay for anything in Silicon Valley as everything's free at all times.
Yeah, that's a great question. So two things. I think number one, how do we differentiate? And it's all about getting the right people in the room.
Mhm,
So we always start just like a startup. You want to be obsessed with your customer.
mhm,
We're obsessed with who do we want to be in the room, and that's usually like, and who do we want to create value for? And that's usually early stage startup founders.
mhm,
So we start with the founder, and then we think back. We work backwards, and we say, okay, who would be the best speaker that they would want to hear, right?
mhm,
And with each event, we can raise the bar and get another
mhm,
higher caliber speaker because the reputation is building, the brand is building, and the network is growing. So that's the first step. We want to get the best speakers, get the best people in the room. Then, as far as how we make sure that people are or I guess the question about ticketing. So, like, how do
mhm.
we get people to pay? Well, if we can build up this reputation that we can always get the right people in the room, meaning if you come to our events, you're going to meet potential investors, you're going to meet potential deals to invest in, you're going to meet advisors, you're going to meet customers, whatever it is.
What's a I want to sorry, like I'm afraid I'm gonna forget, but like what's a ratio of investor to founder at these events? And then like how big of like, like of course you just mentioned about like the 600 people event, but like on a day-to-day basis, like what's like kind of like the size that you're like kind of shooting for?
Yeah, it's a great question. So I think every event varies, but sometimes it's like a 30% investor, 70% founder split. And
Mhm,
sometimes we do events that are more geared towards investors, and it could be
mhm,
like the opposite. It could be 70% investors, 30% founders.
mhm,
Um, And just to finish up the last thought, one thing that we're very conscious of is a lot of early stage founders don't actually have tons of capital. And so when we talk about charging for events, the reality is we set a ticket price, and that's just a filter because
Mhm.
we want to make sure we get the right people in the room. But we often are sending out a lot of free tickets to founders and even investors and key people that we want to be in the room. And oftentimes, if they're getting a free ticket, they're like, oh my God, the speaker lineup looks great. There's going to be good people there. Then they'll be likely to show up.
I love that. I feel like I wonder when it comes to like thinking about like the keynote speaker or like the most like critical people there. Um in Silicon Valley, I feel like everyone's trying to get like a Sam Altman or like a Jensen Huang everywhere. But how do you kind of like compete with the popular speaker to come to your event?
Yeah, I mean, if we were doing things in Silicon Valley, it'd be tough to compete with the people that are getting Jensen Huang and Sam Altman. We're
That's like a
not-
thought thing. I feel like that is happening very frequent here.
I feel like I've been seeing
Crazy.
that. Yeah. But, being in places like Miami and Seattle, it's a little different. Now, Seattle has one of the things I love about that ecosystem is that you have so much world-class talent. I mean, I'm talking about executives, founders, investors, and a lot of them are open to being part of it. We've had some incredible speakers in Seattle, including, co-founders of companies like Smartsheet and Onvia and people like Kirby Winfield, who's built 4 companies and had 2 IPOs and 2 acquisitions. People like Matt McElwain, who helped build Madrona up, and and Jeff Entris, who was early investor in companies like DocuSign, Rover, and so I think for us, we've been blessed that these amazing individuals who are so busy and have so much on their plate have said yes to speak at our events. And I think what's helped is that we've been doing the events for so long that word gets around pretty quickly. So it's not hard, especially if you're a very well
Mhm.
connected investor or operator in an ecosystem. You could do a quick reference check and ask, hey, how was the last event? Hey, you spoke at their event. How was that? And the speakers typically have a pretty good experience at our events, and they meet really great people. And so there's usually positive reinforcement that comes from that. And so people are more willing to come back.
I wonder, I love that. Like I feel like it's so like you said, like it's getting the reps in and then like build up the reputation like one event at a time. I wonder like when it comes to like thinking about converting people into like LPs or like deal flow or like just generally like business partners, and how would you kind of like go about like turning that connection into something more? Of course, like, if things can just happen gradually, like, organically would be awesome, but, like, sometimes I feel like that conversation should have happened maybe earlier, like, I don't really know what's your, like, approach on, like, converting people into, like, a LP or, like, a business relationship after that.
Yeah, well, I think you always want to. I think in business, no matter what it is you're doing, you always want to find mutual interest and mutual benefit, right?
Mhm,
So I think it starts with just a conversation, and the beauty of the events model is it allows that conversation to happen. It brings these people to the table that normally maybe we wouldn't be able to get a meeting with, or maybe they're just too busy, but they are interested in the speaking opportunity, so they'll come
mhm,
out. And then if we get the chance to talk, then it's just understanding, like, where are they at in their journeys? Are they angel investing? Are they investing into funds? And, like, if they're not actively deploying or actively investing, then that's fine, and we can be friends and we can help each other in other ways, right? But I think it just starts with understanding, like, where are they at, and do they have even interest in this type of thing, investing
mhm,
into a venture fund. Some people are over deployed into venture and
mhm,
tech. Some people are just not interested because it's too risky of an asset class.
mhm,
But I think it's just asking a simple question. It doesn't have to be anything like, too aggressive or like too
mhm,
formal. It's like, hey, are you actively like investing? Like, by the way, are you investing in funds or companies? And
mhm,
it's like, if yes, then we can continue the conversation. If
mhm.
no, then that's fine.
For sure. What is your, I guess, like, do you have like a CRM or something for like, I'm sure like everybody kind of have a CRM for like investor if they're like raising funding. But as for like let's say call it like the first 50 people when you close or something, like how do you navigate these conversations? Like, and like when you're saying, like when someone is saying no, like the University of Florida ventures person, you mentioned like, eventually they turn into an LP. What kind of update do you have to do? Or is that just like inviting them to every event and they're like, wow, that's like amazing? What kind of track record do you have to have? Just because like I feel like um there's like so many people are saying so many things. Like I've seen my friends have like, done like call it like 4 SPVs and they have a fund, or there's like people that done like 30 angel investment and they'll like have a fun. Like and then obviously everyone will suggest you to like, why don't you just scout for blah 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 or like, do SPVs. But like, is that really the right way? Just because I feel like there's just like so many ways to like actually build up your track record. And obviously, I feel like you guys have done successfully to turn it into a fund. What does that kind of like look like for you to like build up the track record? What do you think like people are actually trying to see from you to like have the confidence to like, get the ball rolling?
I think people want to see that you're going to do this with or without them, right? They
Mhm.
want to see that this is inevitable. Like whether they invest in your fund or not, you're going to go out and build a fund. You're going
Mhm.
to source good deals, and you're going to continue moving forward. Because people don't want to have somebody that's on the fence that it's like, oh, I can invest in this, but are they going to be able to pull it off? They don't want to have any doubt about that, right? And so the events allows us to build reputation at scale, which I think is like a really powerful thing. It's very
I love
hard
that.
to build reputation at scale because you have to get in front of so many people. But if we can bring in CEOs of publicly traded companies, top level investors that are highly reputable, and have them speak at our events, and you're in the audience, all of a sudden you're like, wow, like 161 Ventures must be pretty legit. They're the ones organizing this. All these people are here because of them. They're the ones who brought in these speakers. Like they're clearly connecting with the right people. And so it allows us to build that reputation at scale. But that does not substitute, the ability to have a track record as a fund manager. That's obviously very key. So I think you have to demonstrate that you've been able to get into differentiated opportunities and like that the event strategy is actually converting, it's actually working and giving you that deal flow. And we have been able to demonstrate that with several of the companies that we've gotten into and also help them raise their entire subsequent rounds by finding the lead investor and finding other investors to participate through the events strategy, which
Mhm.
has been incredibly powerful for us.
What are some ways that you can stay in touch with the crowd? Just because I feel like, when you tap into them once, like giving them a free ticket, and like, do they just organically show up the next time? Or like, do you have to DM them like another time, another time? Is the same people show up at every single event? Or like, do you have like a community of like the same cohort? Or is this like completely different? Like this time is like fintech, that time is like deep tech, or, what's a vibe on
Yeah.
the attendees?
Every event has a different audience. I mean, we're doing events in Miami, we're doing events in Seattle. The
Mhm.
events that we're doing, some of them are enterprise AI summits, some of them are just a venture day, some of them is like an angel investor roundtable. So the attendee profile is going to look different at every single event.
Mhm.
And as far as sending out tickets, like it's just great for founders to keep in touch and like be connected through LinkedIn and like we're still figuring out how we're scaling our processes, and so right now everything's pretty manual, and we will go through LinkedIn and like manually invite people and like send free tickets and stuff. So it's like we sometimes forget people, even people that like is very very important for us. So it's we're still trying to figure out how we can make sure that everything is streamlined and that we can
Mhm.
get all the right people in the room every single time. But I think the first step is just connecting on LinkedIn and like if they're posting stuff, we're going to see it. We're pretty active on there and maybe engaging with some of our stuff as well and kind of building that relationship over LinkedIn. And then eventually, maybe one day we get a chance to meet at one of the events or even meet in person and then and go from there.
Um, I love that. Like, how do you mentally having the confidence of like you will be able to pull this off? Just because I feel like obviously you did the testing event of like the 600 people, but like I feel like that converting into like a fun itself, it's like a journey, and like obviously a hearing 49 times no to one yes, it's like a journey too. How do you kind of like deal with like the rejection and like having the self-confidence to like come through?
Yeah, I think it's very difficult. I think anybody who's trying to change the world or do anything that's revolutionary or very
Mhm.
difficult is going to deal with failure time and time again. And I think what's helped us is that we absolutely burn the boats. There's no backup plan. Every single time that things get incredibly difficult and we faced numerous rejections, I think to myself, I'm like, do I want to take a job somewhere else? I'm like, absolutely not. Like, I can't, I can't work for somebody else. Like, there's no other option. Like, I got to keep moving forward, no matter how many times I get rejected or get punched in the face or however bad it feels. I've got to keep going in this direction because there is no alternative. And
Is
I
a job that bad? Because sometimes I've seen people with a job. I'm like, I'm kind of jealous just because they're like, working a few hours and then like, doing their side hustle on Shopify or something. I don't know, like what's the vibe there? Like, why is job so hateable?
Well, no, there's nothing hateable or nothing bad about a job. I think it's just my personality. I think some people are wired in a way where they can have that the what is it, the monotony, the tediousness, the 9 to 5, the
Yeah.
then the having to report to a manager or
Yeah,
not.
but I think everyone having to report to everyone just because, like, think about event, you need a sponsor, and then, like, for the fund, you need LP. So, like, technically, you're working for and then there's the entrepreneurs too, like, so every day you're, like, technically a customer support for everyone too. So, I don't
Yeah,
know.
you're absolutely right. I think the difference is that the way I would look at it is kind of like an artist, and
Mhm,
as an entrepreneur, as somebody who's building their own firm, you have a blank canvas and you can build whatever you want. And yes, you have to deal with like yes, there's sponsors, there's investors, there's founders, and
mhm,
it's not like you're just completely free to do whatever you want, right? You have to do things in a certain way, but you have a blank canvas and you can build it in however way you want to. Whereas like if you have a job, you have somebody looking over your shoulder who's telling you like, okay, this is what we need to build, this is what you need to do, right? And then your creativity is limited, so you're kind of constrained, you're stuck in a box in a way.
for sure. I wonder, how do you guys think about like, expanding to like different regions? Because, you just talk about Cleveland and then like, we all met in like Seattle and then there's like different tech hubs or like non-tech hubs. How do you think about like where to go and kind of like dominate that place to like recreate the Florida success in like a different region?
Yeah, so we're really looking for emerging markets, and that what I mentioned about Seattle is why that
Mhm,
region is so interesting to us. Now we're looking at places like Austin, like North Carolina, and even we do want to get more plugged in the Valley in New York, which are like primary ecosystems. But for us, it's where do we have a unique edge, and where can we rapidly get ingrained and plugged in and start getting quality deal flow. And oftentimes it's those emerging markets that are not the tier one ecosystems, but maybe tier two or tier three.
mhm.
Still a high amount of concentration, a high amount of engineering talent, and great product builders. So yeah, I think, and we have a formula that works. We did it at University of Florida. We showed that we could replicate it in a place like Seattle, which is actually like a much larger ecosystem and
Mhm.
city, and now it's just a matter of picking and choosing where we want to spend our time and where are we going to get the highest ROI? Where are we going to get the best opportunities? That maybe,
Honestly, I voluntarily suggest my school, like University of Illinois Urbana-Champaign, top engineering school. I feel like it's super overlooked in terms of geographic location. As for like, I feel like so many of our schools, like best technical talent, already moved to Silicon Valley, of course. But I definitely feel like it's like such a like underrated, like, area to, like, look into just because like, the Chicago tech pool would be so super solid as, like, a lot of people probably just want to stay at home, like, instead of, like, moving somewhere else.
you're
But in terms
you're
of, like
absolutely right. I mean, we have actually like talked about this many times. It's funny that you mentioned that particular school because that's where the founders of PayPal came out
yeah,
of.
yeah, that's literally my undergrad, like yeah, so many amazing technical talent, like, every year moving to Silicon Valley, like, when we're, like, doing some sort of, like, gathering at the Dolores Park, it was like low key, everyone worked for, like, every big tech company you can ever heard of, like, it's crazy. So, I feel like a lot of the tech talent, like, eventually, probably, they actually want to move back to Chicago, but, like, they have no, they don't really want to give up, like, the lifestyle here just because like, everybody loves tech, and then, like, like, Silicon Valley is still, like, the tech hub of the day, and, like, I feel like it's a really hard competition to be like, "Hey, like, do I want to go home right now, or, like, do I want to, like, extend my career success?"
Yeah, and also it has a similar geographic position to Gainesville in a way. So one of the reasons that Gainesville is so isolated, and that, they call it the swamp. It's 2 hours away driving from Orlando,
Mhm.
Tampa, and almost 2 hours from Jacksonville. So any major airport is not super quick and easy to get to, right?
Right,
And I
right. But
heard,
how do you bring the speakers there? Like, I think that's, like, the major challenge, right? Like, like, I don't know, like, I'm sure, like, people go there sometime, but, like, it's hard to be like, "Hey, convince, like, Sam Altman or something to go to your I." I don't know.
yeah, so a lot of the speakers are doing it. We built a relationship with them, and they're doing it because it's a favor to us, and they want to
Mhm,
want to support. Some of them are doing it for the long term because they see opportunity at University of Florida because of the talent.
mhm,
People have been hearing about University of Florida for a long time. I mean, it's the alma mater of Chris Malachowski, the co-founder and CTO of NVIDIA, and
mhm,
he actually recently donated $60 million to UF. And
mhm,
now they've got the most powerful supercomputer for AI of any university in the country. It's called the Hypergator. And we also have a brand new AI hub, 7 stories, cost $170 million. It's the most expensive academic building on campus. And I mean, Chris Malachowski was just here last week. They hosted AI days. We just saw him. There's a hackathon happening. So it's just like there's so many bright engineers here, and there's so many great things happening, and people have been hearing about it for a long time. So whenever we call them up, then they have two reasons. It's like, all right, 161 wants us to be there, but then also we should be spending time here because there's a lot of talent there too.
I wonder what would you say would be the playbook to recreate in like a UVI or something? Because I think like for Florida, like of course you have an advantage. It's like you went to school there, you understand the people there, you have like the direct network immediately. How would you plan on growing in a geographic region that like you have never been? Obviously, you can see on the map, but like like how do you go to like the entrepreneurial centers to be like, hey guys, like we're here, or like how do you kind of like just really test out, like, if a place that actually can pull off the playbook. And what is a playbook? You don't have to get into, like, details, but, like, I think on a high level, like, what does that kind of, like, entail?
Yeah, so it's all about creating value for the startup founders.
Mhm,
And that usually starts with some programming, whether it's hosting a startup boot camp or a tech summit.
mhm,
Now, usually the first step is finding some catalyst or some connector, some super connector in the ecosystem
mhm,
that can help us get ingrained and can help us get that
mhm,
first event off the ground. So at a place like UIUC, we're actually very interested in doing stuff up there, and we've had conversations.
mhm,
But we're looking for somebody to help us, get connected and host that first event. So
mhm,
it could be like an entrepreneurship director at
mhm,
UIUC. It could be a successful founder in the ecosystem, a big investor in the ecosystem. It
mhm,
could even be a big service provider like a law firm that
mhm.
wants to sponsor an event but knows a lot of people and can help us put it together as well. So there's not really one way. It's kind of like it's kind of like an art in a way. You have to
Mhm.
figure it out, and there's no real recipe.
So another question on that is like in our school, like so basically I would say like on campus, it's just the undergrads, right? Like and then like we're so far away from like Chicago, it's like 34 hours. And like would you do the event in Chicago or, like, in our school? Just because like, in our school, you would just attract a bunch of undergrads, but, like, maybe, like, not everyone will just be, like, mega successful right after school, right? So, what's a, like, actual deal flow generation there? Is it just, like, a playing the long game, let's invest in these people, like, right before they become successful, or, like, what's a, philosophy or, like, thinking framework there?
So at 161 Ventures, we love to think as long term as possible, and we just turned
Mhm,
30, and so we've got a long time horizon to continue building the firm.
mhm,
So the part of the reason we do things at University of Florida is because, well, these students are not going to be ready for funding next month, maybe not next year. It
mhm,
may be even 5 years or maybe longer than that before they're ready to raise capital. But we want to be here, we want to build that relationship, and we want to be the first people to help them because whenever that time comes, we'll be ready. We'll be ready to have that conversation. So if we decided between UIUC and Chicago, yes, we want to do stuff at both places, but we definitely want to invest in the long term of UIUC and get to know more students there and support them when they're early in their journeys because you never know. You might get the next Mark Andreessen or you might get the next Elon Musk or whoever it is, Larry Ellison. So it's just, it's really just putting in the time. And I think most VCs are not willing to do this or play that long, like super, super long-term game. And I think that's how you get alpha, is how you get a competitive edge in the industry. So for
Mhm.
us, we're willing to get in the classroom. We're willing to go back to college and create these hackathons and teach and do whatever we got to do to build those relationships.
I wonder, so like, okay, so there should be like a flagship event there and then generate some attention. But I feel like a lot of it were also like the repetition. I feel like I value repetition more than like a big flagship event, just because I feel like the bigger events you can get a lot of traction all at once, but like people forget about it like the next day, kind of like. How do you have like the cadence to do it as like, since like I feel like it's literally 4 hours away from Chicago, and then you have to fly to Chicago and then fly there. I'm pretty sure in our school there's like a tiny airport there, but like I've never heard of anyone flew there. So what's what's the actual cadence that you have to like, capture these like to build like a representation or like mind share within the community
I
in
think
each geographic location, since you guys are already in like other places too?
I think all big things start small. And so I think it starts with just having one event and then figuring out what is the cadence that we can do this? How often can we do this? And
Mhm.
now we actually have a calendar of yearly events because we're doing so much now. I mean, it's like 2 events per month, and then we're attending a bunch of other events. And so we've got some room in the calendar. And so it's if we do the first event at UIUC, then we can look at the calendar and say, what is as soon as we can get back here and realistically do another event? And then we put that on the calendar. And maybe it starts off as once in the fall, once in the spring. Maybe
Mhm.
it's like come up for a week every single fall and do several events that week. I don't know what that looks like, but we are interested in taking that first step. So if you know some people out there at UIUC, we'd love to get plugged in.
Amazing. If any alumni is listening, please hit us up. So do you study like the data of like each event?
We are collecting a lot of data from these events, and so we
Like,
do
what
want.
actually matters? Like, what are the data that actually matters? So some people are like, the like title, but I'm like, if you're a C level of like a 1% company and like a C level of like a 6,000 people company, that's like a very different thing, right?
Yeah, no, it is very different. So I think the key for us is making sure that the attendees all get a lot of value out of it. The sponsors are happy, and then the speakers are happy. Like that
Mhm.
is the most important thing. If everybody gets value, every single party gets value, then we did a good job. And
Mhm.
so then every event is how do we create even more value for each party, for
Mhm.
attendees, speakers, and sponsors. That's the core metric for us.
Mhm. Um, I wonder when it comes to like supporting yourself. Like, so I was chatting with Christopher the other day. Like, um, he was talking about like, I feel like starting a small fund and like it's really hard to actually make money off the fund as like the management fee were like not that much. How do you guys like support yourself like throughout the journey?
Yeah, it's a great question. So that's actually where the events company comes in. So in the beginning, we didn't think it would have this effect. We didn't think it would be
Mhm.
possible to actually be generating revenue through events because they are pretty expensive. But
Mhm.
over time, what's happened is we've gotten really good at negotiating things, at finding people who can do great work at lower cost in terms of like
Mhm.
video production and photography and maybe providing catering and again, like with each event, there's this compound effect that happens that we get this reputational advantage where people want to work with us. People want
Mhm.
to support our events. People want to offer us discounts for our events and
Mhm.
support however they can because they see the value of connecting with people at our events. So it's really this compound effect. Now, every event is different. Some of them will break even on, and that's totally fine because again, the end goal is not make money. But thankfully, several of our events are making money, and it's allowing us to not only stay afloat, but be able to continue investing into building our firm. Uh,
Mhm.
like all these, in the past month, we've been to New York, San Francisco, Seattle, Vancouver. We've been all over DC, and we've been able to do all the traveling because of the events company. We wouldn't be able to do that otherwise.
I wonder, so in terms of like making money, like how do you think about the event size and like the cost of it? Like just because I feel like for event to happen, like, actually it takes so much work. Like I've done like a flagship event like at the beginning of the year, a lot of like amazing venture back founders as well as like investors and everybody else came out. And if I do it again, you should totally come. The TLDR is like, I think it was wow, it was so underestimated about how much work it have to goes into it. Like I have to promote it for like a month, and then there were like our event eventually was like featured everywhere. We got like amazing sponsors like Valley Ventures, Microsoft, Blackstar, and like a lot of different like amazing sponsors, as well as like I feel like it's just really hard in general. Like you have to like DM a bunch of people to make sure the event was quality and everything. Um, and also the cost was like not low. So like how do you kind of like think about from like an economic perspective on like, do you do like a really big stuff or like do you do like a bunch of smaller stuff? And how do you kind of think about like charging, not charging, and like how much to charge as like there's so much just like competition everywhere?
Yeah, absolutely. So we've done big stuff. We've done small stuff like dinners. We've rented
Mhm,
out an entire beer hall in Seattle and had over 300 people come out. We've
mhm,
hosted a big event at the Better office in Miami with like 350 people. And, I think it comes down to, again, finding aligned interest or mutual interest. And so for us, we typically try to find venues that are trying to get more people to come to their
right.
venues or people that are
Mhm,
looking to get connected. And maybe they want to get in front of more talent, more engineers, more founders. And so they're willing to host us either for free or for a
mhm,
discounted rate, and that usually helps.
mhm.
But you're absolutely right. It is very labor intensive and it is very expensive unless you can find that aligned interest and find people that are willing to partner with you and work with you and
Yeah. But what if like when you're charging, let's say you're charging a ticket and then like the attendees are like people who are may not be like the right profile for like your ideal attendee for the sponsor, like there's like a conflict of interest for each other.
Yeah, and I think there's no perfect answer there. You don't want to be too strict and like reject people. I mean, in some
Yeah.
cases, you get over capacity, you have to reject people, but you don't want to be like, oh, like looking up every single person and thinking like, oh, this person shouldn't be in the room. I mean, unless there's like a really big red flag, like I don't know, like they've screwed somebody over or maybe
Right.
scammed people and they have a bad reputation in the ecosystem, then maybe you don't want them in the room. But some people maybe they're just a realtor, but they're genuinely interested in learning about investing in startups or
Mhm.
maybe starting their own startup one day. And so you want to give those people the opportunity too. So I think the ticket price, and that's why we play with the ticket price. Sometimes it's $30, sometimes it's $80. And for us, it's again, it's a filter. If you're a realtor and you want to get into tech and you're willing to pay the $80 ticket, then no problem at all. Like we're happy to have you in the room. So yeah.
Um, Love that. I feel like that's a really great point. Like, a lot of people are just like hustling, trying to get into the door. Like they just don't have like the right connections. And then they're just creating opportunity for themselves as well. Um, I wonder when it comes to like thinking about like the venue, like how do you like what is like a venue that like will want people to come? I think every venue want people to come, but obviously we probably won't pick the one that's like already so populated by like the tech community already. How do you know like which venue would like will be willing to like chip in or like something?
Yeah, it's not easy. I mean, I think especially your first time doing an event in a particular ecosystem, it's
Mhm,
likely you're not going to find a venue that's going to be free or
mhm,
whatever it is. And we have done events at hotels, which I think is sometimes like these conference rooms are pretty dry and there's nothing sexy
mhm,
about them, and they can be very expensive. And it's just you gotta play the best hand with the cards that you're dealt. And so the more time you have, though, the more like the more time you've been hosting events in an ecosystem, the more leverage you get, the more connections you have,
mhm,
and typically the more options you'll have. So now in Seattle, like we know a lot of really great places, and depending on our budget, if we have no budget for a venue, we can find a place.
mhm,
If we have a budget and we want a cool venue, then we have some ideas.
mhm.
But yeah.
I wonder, do you like find the venue first and then like settle down on the speakers, or like do you find the speaker first and then settle down on the venue? And then where does the sponsor came into like I mean not where, but like when does the sponsor came into the thing? Like I mean, I feel like I was doing over the place at the beginning. It was like very thankful that like shout out to Conviviality Venture. like provided their office to us, but like I would just be like so mind-boggling if like we have no place. So like I wonder, how do you think about like finding that first, like either place or sponsor or like anything? Like what's a kind of like the framework to think about what's gonna happen?
The fun part about it is that every single event is completely different. We'll
Mhm,
have events where we have the venue locked in 6 months ahead of time or 3 months ahead of time,
mhm,
and then it's figuring out everything else. And then we have events where we've got, we're a week out and we haven't
mhm,
locked in a venue, or maybe we have a venue and we just found out a week before the event that we
mhm.
can no longer use that venue.
Oh my god, like what do you do with that? So I feel
Oh
like
yeah.
that's just like a nightmare to think about.
Oh yeah, I mean this is the thing. Like we are prepared for it because we've done it so many times that we understand every big event we ever do. There's always some type of last second emergency or something that happens, and so it's just par for the course at this point. Like you get used to dealing with that, and I think it makes it fun because it's like all of a sudden you've got to figure out this big challenge.
So how did you guys like end up like at a place that's like the one like week kind of thing? I hope that's a smaller event. So
So
I don't
that
know if like if you're selling like $1,000 ticket to like 1,000 people, and then at that point I would be just like call it off.
Yeah, oh no, that'd be different. This particular one, we had like over 300 people coming,
Mhm,
and I mean, we had raised probably around 15,000 in sponsorships, and all of a sudden, the venue told us like, "Hey, there's an issue with the city permitting or something, and we can no longer do the event at our venue." And so, thankfully, we just started calling everybody that we could, to figure it out. And one of my good friends, he started Better with Jake Paul, which is one of the fastest growing sports betting companies right now
mhm,
on the planet. And they have a beautiful office with a great event space. And they ended up taking us in, even though it was like a week out. And then we ended up coming back and doing another event there the next month.
mhm.
And they were great to us to host us. But yeah, I think there's obviously some luck involved, but I think if you get creative enough and if you are willing to work enough, like you will be able to figure it out. You just got to be determined and talk to enough people and yeah.
100%. Do you have a hard stop like at 10?
No, I can go a few minutes over.
Okay. So I wanna do you feel like a lot of like the attendees are gonna turn into your business collaborators, call it like a future sponsors or other kind of like opportunities? Or do you feel like a lot of it, I would say like call it like 95% and up are more towards like the social aspect?
The question is like if our attendees become
Like
collaborators.
yeah. So if the attendee become like a future sponsor or like a future speaker or like even just future like investors or like future like portfolio companies, like how I guess like how do you measure the outcome from like a venture perspective or from like your business running perspective?
Yeah, it's a great question, and it's super cool because every event
Mhm,
serves as a funnel for the next event
mhm,
because people just saw what we did. So now, if they're in the room, they're probably a lot of them come up to us and say, "Hey, let me know about the next event. I want to be a sponsor."
mhm,
Right? It happens all the time, and then others are like, "Hey, let me know about the next event. I'd love to come, and I'd love to help out however I can." And so a lot of it comes through that, but
mhm.
also it's more than that. I think we're doing this thing that has become really popular now, which I think is very powerful. And it's called building in public, right? And I mean, you're doing
Yeah, 100%.
that, but
Everyone build in public these days.
exactly. And we have gotten so much value out of that. Every event we do, we get good pictures, we get good video, we share it, we tag people, they repost it, and it just creates this compound effect.
Do you like have like a video squad or like do you like kind of like just like do private stuff? So
We
obviously we just talk about like building public. Of course, we all take pictures at all time, but do you like video record everything?
we subcontract videographers for all of our events,
Mhm,
and thankfully I used to run an agency. That was my first company I started, and all we
mhm,
did was content marketing and
mhm,
video. And so I've gotten pretty good, and some of these vendors that we work with, we build a really close relationship with them because we're
mhm.
also kind of, in a way, I'm kind of mentoring them and guiding them and saying like, hey, it'd be better if we did this. And then eventually we become very aligned, and they know exactly how we want to work. They know exactly how we want our content to look like.
Yeah.
And
Shout out to your YouTube channel. It was great. I feel
Oh,
like the content quality were like pretty high.
thank you so much. And we're working really hard to continue raising the quality of that content. We have a backlog of probably like 30 videos that we need to
I
upload.
feel you.
We're going to work on getting that up in the next couple of weeks. So,
How do you like process on like, some people felt so I'll just use an example. Like I have a friend around here, like my friend Georgie hosts these like dinners of like for like Stanford founders. And then he just like they never really record anything. So like I feel like people are really just like feel like free to like just share a lot of information that they probably wouldn't share in public. I mean, I don't think there's any like crazy stuff going on, but like it was more towards like the vibe was like more relaxed. So like the executive or like the successful founder would be more like um connected with the audience in person and stuff. So like I've also chat with a bunch of like other people who have like done events. Like a lot of people were saying like no recording is better than recording. But on the other hand, like us building in public, as you said, like, sometimes we have to like record some of the stuff. Like, what's your experience on like, should we record stuff or like not record stuff or like what's the kind of like the general practice there?
yeah, I think there could be a balance there. We've done some stuff that's off the record as well, but I think it just depends on your audience.
Mhm,
Like we've brought in speakers just to mentor a few portfolio companies where it's
mhm,
off the record and they could ask all kinds of things, and
mhm,
the speakers could be as authentic as possible. And so I think it depends. I mean, these larger events, the purpose is to continue getting us quality deal flow,
mhm,
connecting us with more technical advisors,
mhm,
and helping our portfolio companies raise more money and close more customers.
mhm,
And so in those, it's not as important for it to be off the record. And
mhm,
also, I think some of the speakers that we bring in are so high caliber that
mhm.
it actually makes a lot of sense to record those and upload those.
100%. I want to end with like one real question and then 1 minute fire round. One real question is like, thinking about building the fund, right? Like how, as you mentioned, like, you guys didn't come from like a particular like super solid like technical background. So how do you kind of like doing diligence for these different companies and um what does your like portfolio construction kind of look like to like since like investing in early stage is um I guess like a tough like do you do like the numbers game approach? Do you follow on or like, what's a thought process on like, turning the deal flow into a fund?
Yeah. So first question about diligence. It's a great one because you're absolutely right. We don't come from a technical background. And so again, this is where the events comes in. It's allowed us to connect with a lot of these highly successful, highly accomplished technical
Mhm,
leaders,
mhm,
people like, corporate vice president of Azure cloud security from Microsoft, uh,
mhm,
people like the former CIO of T-Mobile has
mhm,
helped us diligence multiple companies and has actually invested in two of our portfolio companies.
mhm,
So we're building relationships with folks like this, people who have built multi-billion-dollar companies like Marvin Wheeler, who was the COO of Terramark, which sold to Verizon for $2.3 billion.
mhm,
And these individuals will jump on a hour-long call with us and really dig deep into the technicalities of the startups that we're looking to invest in. And so if we get the check from them, if they think that this is very interesting, and in some cases, the ultimate validation is, hey, I want to invest in this company too,
mhm.
which actually happened. That's how we got the former CIO of T-Mobile to invest in one of our portfolio companies, and now he's actually helped that company close a deal with T-Mobile. So it's like, in a way, it's part of our diligence process. But if you're a founder that wants to work with us, even if we don't invest, you're going to get value out of our diligence process because we're going to bring in high-level people that could serve as customers,
Mhm.
advisors, and even investors in your company.
Do you have like do they have to have like face-to-face interaction first or like do you just be like, "Hey, president of T-Mobile, like here's like 45 portfolio company we have, like you should pick one to talk to," or like what's kind of like the processes to like actually get the people into the room?
Yeah, in some
By the way,
cases.
it's really impressive. Like just want to say.
Thank you, thank you. In some cases, it's like we meet these people like at some of the events,
Mhm.
and in some cases, a lot of these folks like they invest in groups, right? They have like a
Yeah.
cohort of like a couple of friends, and they all trust each other, and they kind of do deals together. And
Mhm.
so, oftentimes, we meet one of them, and then that one, if we have an interesting deal, they share it with their friends, and
Mhm.
then all their friends are like, "Cool, I'm in too." And then that's how we build that first relationship. And then when the next thing comes along, now we have a bigger network of people to help us diligence these companies.
Do you send over like one deal directly to them, or like do you be like, okay, so here's like a few companies that we thought were interesting. You want to take a look, or like what is a like is it like a formulated into like an email newsletter vibe, or is this more of like, hey, I just saw you were speaking at our event. By the way, we have like these 5 companies. Take a look.
People don't like when you give them more homework. So, for
Right.
us, we try to make it as easy as possible. We only send deals to people that we truly believe are going to be genuinely interested in that particular investment and that have a unique insight into that particular market or industry to be able to vet. So, sometimes people are getting a deal from us once a year. Sometimes it's once a quarter. Sometimes it's once every 2 years, depending on who they are and what their background is and what they've expressed their level of interest is. And so it's a case by case basis.
I'm very scared to like burn these relationships because I don't want to be like, oh my God, what did you just send me? And the person just never return the call ever again. Um, like how do you kind of like filter out if this is like actually worth like to send over?
In the early days, I think the blessing for us is that we started the accelerator. We had 2 years of running an
Mhm.
accelerator as experience and as context. And that allowed us to filter out things that initially, like, just wouldn't pass the first checkpoint, right? There's something wrong, fundamentally wrong about the business, or they're just way too early on. The pitch is scattered. So we got to that point where we had like that basic filter. And I think over time you keep refining that filter and it gets better and better and better. And then so it's like, hey, you have a conversation with the team and you find them legitimately impressive. It was sent to you by a qualified source, like a former C-level employee at Tableau or like former C-level executive at another massive tech company. And then you vet and you find the team pretty interesting, but you need a little bit of guidance on the technical side. Then it's like, okay, we can vouch for the founder. We can vouch for the people that they have on their cap table and the people who sent us the deal. Now it's a
So
matter of,
got it. So you're saying like the deal flow are actually coming from the executive. So like,
in some cases, yeah, in some
oh,
cases.
okay. But what if it's a deal that you find interesting from the ground up? You meet someone at like a major tech conference, and then you're like, "This is actually not bad." And then like at that point, do you send deals to like 5 of your friends or like peers that are like good, but they're on like kind of like our level of success right now than like the more established people, so that like they would take a call, or like what's a evaluation look
So the
like?
first step is you want to put them through the ringer in a way. Like you want to make sure that the foundation of the company is set up properly to be able to scale this company, right?
Right.
Like basic checkpoints, like who's on the cap table right now? How much equity have they given to advisors and investors? Do they have a technical co-founder, or are they outsourcing to some shop in India? Like it's just like check the basic things, and once you go through all the checklists, and if everything makes sense and they have a good story and they have some good traction, then the next step is we bring in one technical advisor, one or two. And maybe these people will help us diligence. If they find it interesting, now we're like, okay, cool. They might be onto something here. Why don't we share it with our network and see who else might be interested in maybe investing in the deal? So I
Mm.
think it's like, you don't just want to go like, oh my gosh, I really love what you're doing and send it out to 100 people. I think it starts by like you really want to do that diligence part on your own side and vet them, and then once you've gotten to those checkpoints and everything checks out, then you can say, okay, let's see what everybody else thinks.
For sure. Is the first technical checkpoint gonna be like your best friend who work at Amazon, or like is this gonna be like a senior person to check?
Yeah, it's a good question. So I mean, sometimes it's somebody that we don't even know that well, or somebody that we just met at an event. But the reality is, it's like if we think it's really interesting and it's in their space, think about it from their perspective. They would want you to share that with them,
Mhm.
right? If you see something in cybersecurity and your friend is like an executive at F5 networks or whatever it is, and they've told you they're interested in angel investing or
Mhm.
that they're interested in like new technologies, you're doing them a disservice if you don't share it with them, right?
Yeah.
So I
I definitely had that, like, thoughts just because like, I feel like living in Silicon Valley, like, there's so many amazing, like, I, like maybe, like, a month ago, I was, like, looking at cybersecurity companies, and there's so many, like, of the voice security startups that are, like I'm like, you look great. You look great. Like everybody looks so equally great. And then when I was like chatting with the mentors, they're like, oh, like, I only back like let's say the person is coming out of like a successful startup, basically successful startup, like core engineering team, like spin off, like do something else. And I feel like I've gotten a lot of like feedback on like, why like the other sort of company doesn't work. So I'm like very kind of like, oh wow, like am I just like so naive here to like think about the other teams would actually pull this off? Like I don't know, like I feel like a lot of thoughts goes into like how to pass along deals. But I don't want to like keep you for longer. We have a quick 1 minute fire round for you.
Okay.
So what's your favorite book?
Favorite book is The Surrender Experiment.
Uh who made the biggest impact in your career?
There's a guy by the name of Martin Schaffel. He built a company called AVISPL, sold it for multi 9 figures while being 100% shareholder. And he's a UF alumni.
Who would you invite to your dinner party?
Ooh, that's a good one. I mean, probably be Elon Musk.
Where can we find you outside of work?
Sorry, I didn't hear it.
Where can we find you outside of work?
Outside of work, you can find me in the gym powerlifting. You can find me going for a run. You can find me eating a burger.
Wow. What? I'm sorry. This is such a contradictory
Or,
answer.
or dancing salsa.
What? Oh God. Anyway, Pablo, thank you so much for coming on the show today. It was such a fun conversation.
Thank you so much for having me, Grace. I loved it.
Okay, let me quickly unstream.